Assalamualaikum warahmatullahi wabarakatuh. Today we will be presenting about the government roles in promoting Takaful on RMK12 or mostly known as Rancangan Malaysia ke-12. Without further ado, let's start our presentation. So let's start with our introduction. So Takaful originates from the Arabic word kafala, meaning to guarantee and represent mutual protection based on Sharia principle. Modern Takaful began in Sudan in 1979 and was formally introduced in Malaysia through the Takaful Act in 1984, which established a strong regulatory foundation and enabled Malaysia to develop one of the most advanced Takaful sectors. Takaful is essential in Malaysia's Islamic finance ecosystem, providing Sharia-compliant protection, long-term saving, and ethical financial solution. It supports financial inclusion for Muslim consumer and undeserved group, while strengthening the economic resilience throughout asset protection, healthcare coverage, and the broader halal value chain. Under the 12th Malaysian Plan or RMK12, Takaful is prioritized through initiatives that expand digital Takaful, micro Takaful, and affordable protection for B40 household. RMK12 also emphasizes stronger regulation, Sharia governance, and innovation, aligning government, Bank Negara Malaysia, and industry players toward wider penetration and long-term industry sustainability.
The robust growth of Takaful in Malaysia is not accidental. It's being strategically fueled by a cohesive policy architecture. This engine runs on three key pillars. First, we have RMK12, the national vision. It sets the direction, focusing on inclusive growth and a digital economy, and explicitly positions Takaful as a tool for ethical financial protection. Second, the financial sector blueprint acts as the accelerator. It pushes for digital adoption and new ways to reach people with the clear goal of universal financial inclusion. And third, providing the critical foundation is IFSA 2013. This law ensures integrity through customer fund separation and strict Sharia compliance, which build the market stability and consumer trust necessary for long-term growth. To make this clear, this policy creates a powerful self-reinforcing cycle that is propelling Takaful forward.
Next, I will explain the government's roles in promoting the Takaful industry. We can break down the government's actions into four distinct but interconnected roles. Let's look at each of these in a bit more detail. The first major role is as a regulator. The government's priority is stability and trust. Through Bank Negara Malaysia, the government strengthens the entire Takaful ecosystem by ensuring Sharia compliance, market stability, and consumer protection. Firstly, BNM enforces the Islamic Financial Services Act 2013, which creates a strong legal framework for Takaful operations. This law ensures customer funds are properly segregated and that every Takaful product fulfills Sharia requirements. Secondly, the government improves financial resilience through reforms such as the Risk-Based Capital Framework 2 and the updated Sharia Governance Framework 2023. These ensure Takaful operators are well capitalized, transparent, and equitable. And finally, under this regulatory role, the government also monitors digital innovation. This includes licensing digital Takaful operators and providing fintech sandbox testing. All these efforts ensure that innovation grows without compromising customer safety. The second role is as a facilitator, where the government supports and accelerates Takaful growth. Under RMK12, the government encourages the adoption of technology such as cloud services, eKYC, and API integration. This improves customer experience and allows digital onboarding, especially for rural and B40 communities. The government also expands market access through programs like Pelindungan Tenang, which makes micro Takaful affordable for low-income households. This is aligned with national goals of increasing financial inclusion. By promoting fintech, collaboration, open finance, and cross-border Islamic finance integration, the government positions Malaysia as a leading regional hub for Takaful innovation. Third, the government acts as an enabler, supporting the industry through the education, talent development, and incentives. Training institutions like INCIF, IBFIM, and IZRAN build highly skilled Sharia and Takaful professionals. The government also strengthens financial literacy through nationwide initiatives under the Financial Education Network. In addition, tax incentives such as RM3000 relief for family Takaful contributions encourage public participation. grants and financial support under RMK12 help Takaful operators adopt digital systems and innovate new products. And finally, the government plays the role of a partner. It works closely with Takaful operators, regulators, and international bodies to ensure sustainable growth. Collaborations with BNM, MOF, and the Malaysian Takaful Association drive new products such as micro Takaful and disaster protection schemes. Malaysia also partners with global organizations like AAOIFI and IFSB to harmonize Sharia standards and strengthen our position as an Islamic finance hub.
So next, let's take a look on the key trend and analysis. First, let's look at the trend in family Takaful contribution from 2019 to 2033. This data shows a consistent increase over the 5-year period. Contribution rose from 2036.5 million ringgit in 2019 and 2323.1 million ringgit in 2033, which is about 40% growth at the company level. Contribution also increased from 1915.3 million ringgit to 2216.7 million ringgit. What makes this trend significant is that the growth remained positive despite challenges such as COVID-19 and economic instability. This tells us two things. First, Malaysia continues to recognize the importance of family protection. Second, the Takaful sector have maintained strong public trust even during uncertain times. From a policy perspective, this trend reflects the effectiveness of government and regulatory support, particularly under IFSA 2013, the Takaful Operation Framework, and the RMK12 focus on financial inclusion. Overall, family Takaful continues to be the core driver of Malaysia's Takaful industry. Next is the national family Takaful penetration rate from 2012 to 2032. The rate increased from 13.15% to 20.10%, with the most rapid growth occurring between 2020 and 2022. The increase was consistent for 10 years straight, showing strong public awareness and acceptance of Takaful product. This trend aligned directly with the government objective under RMK12, which emphasized financial inclusion, micro Takaful, and accessible protection for B40 groups. It also reflects successful collaboration between the government, Bank Negara Malaysia, and Takaful operator to expand nationwide coverage. The rise in penetration rate demonstrates that more Malaysians are protected today and that Takaful is becoming an essential part of the country's social and financial safety net. In summary, both contribution growth and penetration rate increases show that Malaysia's Takaful industry is on a strong upward trajectory. Public confidence, supported by effective regulation and national policies, continue to push the industry forward. This trend highlights the important role of Takaful in strengthening financial security and supporting national development under RMK12. That's all from me. Thank you.
Even with strong government support, the Takaful industry still faces several challenges. But these challenges also open up new opportunities. Let's look at the key challenges. First, low public awareness. Many Malaysians still don't fully understand what Takaful is, how it works, or how it differs from conventional insurance. Common misconceptions include thinking Takaful is more expensive or only for Muslims. This keeps penetration at only around 20%. Second, affordability and accessibility. Low-income groups, gig workers, and rural communities struggle with affordability due to irregular income. Conventional insurance is often viewed as cheaper, and Takaful products are not always designed for these segments. Third, digital readiness and talent shortages. Some Takaful operators still lag behind in digital adoption. There is also a shortage of tech-savvy talent and Sharia experts who understand digital systems. Cybersecurity remains as a growing concern. And lastly, growing competition. Competition is increasing, but not only from conventional insurers, but also from insurtech companies and new digital-only for Takaful operators. This creates pressure to innovate and maintain competitive pricing. Now let's move on to the future opportunities. First, green and sustainable Takaful. With Malaysia's push toward ESG and net zero, there is rising in demand for products covering renewable energy, climate risk, and sustainable investments. Second, micro Takaful and financial inclusion. This is one of the biggest growth opportunities. Products priced as low as 2 ringgit to 10 ringgit per month can reach millions of undeserved Malaysians. Government support through the Pelindungan Tenang voucher accelerates adoption. Third, digital Takaful and insurtech. Digital onboarding, eKYC instant claims, and mobile-first platforms appeal to younger customers. Takaful tech, powered by AI, automation, and data analytics, will drive the next wave of industry transformation. And lastly, cross-border expansion. Malaysia is well positioned as a regional Islamic finance hub. Growth opportunities exist in Indonesia, Brunei, the GCC, and Pakistan, especially through Takaful and digital partnerships.
Now, I will briefly explain the key implication for both Takaful operators and the wider Islamic finance sector. Firstly, for Takaful operators, the industry has shown a strong growth over the years. However, compared to conventional insurance, the market share is still relatively small. This shows that there is still a lot of room for further market expansion. Secondly, digital transformation, also known as Takaful Tech, is becomingly increasing important. With the use of AI, blockchain, and online platforms, companies are moving their operation digitally to improve efficiency, provide faster services such as online claims, and remain competitive. Next, Takaful operators are also focusing on product innovation. This includes more Banca Takaful partnership with Islamic banks, as well as new solutions like Wakaf-based micro Takaful, which help meet different customer needs, especially for lower income groups. However, one ongoing challenge is profitability. Healthcare costs continue to rise, which increases claims and reduces profit margins for medical Takaful products. For Islamic finance sector overall, Takaful plays a supportive and interconnect role. It helps strengthen the ecosystem by providing protection for Islamic financing products and contributing to the Islamic capital market, especially through sukuk. Regulatory alignment is also essential. Under IFSA 2013, operators must follow a stronger governance and capital requirements, which helps create a more stable and trustworthy financial environment. Economically, Takaful and Islamic banking support real economic growth because they are based on ethical principles and risk sharing, which helps reduce financial instability. However, cross-border operations still face challenges due to differences in Sharia interpretation across countries. In conclusion, government support under RMK12 together with reforms under IFSA 2013 has strengthened the Takaful and Islamic finance industry. This initiative enhanced the Sharia governance, promote digital Takaful, support B40 financial inclusion, and encourage sustainability. Even with positive growth trend, challenges still exist in terms of awareness, affordability, and market readiness. To move forward, several recommendations can be considered. First, encouraging the growth of micro Takaful, affordable plans, and digital products will help reach more consumers. Second, improving Sharia governance, transparency, and standardization can increase public trust and support cross-border growth. Third, offering a wider range of inclusive products that can help underserved communities. Fourth, the industry should continue investing in talent development, especially in Takaful, data analytics, and Sharia expertise. And finally, promoting ESG compliant Takaful products and encouraging innovation through flexible regulation can help the sector growth, sustainability, and stay competitive. That concludes our presentation. Thank you very much.
So that's all from us. Thank you.